Hey, Suffield Connecticut homeowner. Is the housing market about to rebound in 2026? And exactly what does that mean for you as a Suffield Connecticut homeowner? Get the answers in this month's Suffield Connecticut Housing Market Update. I'm Stephanie Salerno, a local realtor right here in Suffield, licensed in Connecticut and Massachusetts, and team lead of the Stephanie Salerno Team. Every month, I break down exactly what's happening in our local market so that you are empowered with the knowledge to make smart real estate moves. And before I go any further, if you find this information useful, please help us out and subscribe to our channel and give us a like for future Suffield Connecticut housing market updates. If you've been watching the headlines or waiting in the sidelines or wondering if you missed your window, you're going to want to hear this. I'm breaking down the national trends, how they relate to what we're seeing in Connecticut, and what you can expect heading into the new year for our housing market. But first, let's take a look at what's been happening in Suffield. For Suffield, in October, 12 homes were sold, and that was up 33% from October of 2024. 4 new listings came on the market, and that was actually down 64%. October's sale price to list price ratio was 101.4%, and that's up 2%. And the average sale price per square foot was $252, and that was up 16%. October's average sale price was $583,000, and that's down 9% from 2024. And the average days on market were 44, and that's up 7% from 2024. In October, the month supply of inventory is 1.17 months, and that's down 64% from October of 2024 and down from 1.64 months in September of 2025. So we're still solidly in a seller's market, and we're even seeing less inventory than we did just last month. Okay, so this month's data focuses on one question. Is the housing market going to finally gear up and rebound in 2026? To understand that, we need to take a look at a couple key factors. So today we're going to walk through mortgage rate movement, affordability trends, inventory shifts, seller behavior, price expectations, and long-term equity projections. One of the first indicators of a shift is the spread between the 10-year Treasury yield and mortgage rates. That spread has been improving, which is often an early signal that mortgage rates are likely to ease. Rates have been trending gently lower throughout 2025. Not a dramatic drop, but a steady and meaningful decline. So why does this matter as a seller? Well, when financing becomes more affordable, it wakes up the buyer pool. Buyers feel more confident and more people become financially eligible. That increased demand is a critical step towards a healthier 2026 in the housing market. Another factor helping the market regain momentum is affordability. Monthly mortgage payments have been trending down as rates ease. You can see here a marked difference from even earlier this spring. This shift brings back buyers who stepped out of the market during the toughest affordability months. So for my homeowners in Suffield, what this means is more buyers who are comfortable making offers, fewer delays due to financing concerns, stronger showing activity, and more confidence heading into 2026. Homeowners with extremely low mortgage rates have been hesitant to move over the past couple years. We call this the lock-in effect. And this has kept inventory far lower than normal. But we are starting to see a loosening of that lock-in effect. This slide shows the share of outstanding residential mortgages by the rate that they had at origination. You see at the top it's below 3%. Down at the bottom, which is the orange, is above 6%. So what do we know? Well, the top's kind of holding steady. The 3 to 4s is sort of coming down. And then as we look at this right now, the ones that are above the 6 are rising. And I think what we see in this is that as people are going through time, they're going to sell their homes. Less people will have these mortgage rates. So this is something we want to pay attention to. Not all of these people are going to stay in their homes forever, but a lot of them will go, hey, look, we have a great mortgage rate and we're going to hang out here. But now that more homeowners have rates above 6%, they are more open to making a move. And this makes inventory increase in 2026 more likely. The head of economics research at Redfin said, more homeowners are deciding it's worth moving, even if it means giving up a lower mortgage rate. Life doesn't stand still. People get new jobs, grow their families, downsize after retirement, or simply want to live in a different neighborhood. Those needs are starting to outweigh the financial benefit of clinging to a rock-bottom mortgage rate. So for you as a seller, if you want to sell with less competition, it might be a good idea to start thinking about that now. As more sellers decide to list their house next year, buyers will have more options. Inventory across the country is slowly rising back towards more typical levels. even though we're not really seeing a rise in inventory locally in the Northeast and even especially in Suffield. And days on market are also rising in a normal and healthy way. But even though we're seeing that nationally, that's not a sign of a slowdown. The market is moving into a more sustainable pace. But what are we seeing locally? Well, buyers are taking a more thoughtful approach. Quality and pricing strategy matter, and homes are still selling, but depending upon the price range, we're not seeing them sell with that pandemic level speed that we saw a couple years ago. And marketing matters more than ever. So, what are the experts predicting for 2026? Well, most analysts are expecting mild, steady price appreciation. This chart shows the update of 2026 home price forecast. Now, the average of all these forecasters is a little less than 2% for residential appreciation. There is no expectation of a price crash, but there's also no expectation of extreme surge like we saw 2020 through 2022. We're entering a more predictable and stable growth cycle. But I still do hear a lot of people out in the marketplace saying, I do think prices are going to come down and I'm going to wait this one out. But if we take the median home price in this country and look at it against how the predictions would play out over the next 5 years, that same house would go up $61,000 in value from 2025 to 2030. And that's all based on the home price expectation survey we just saw. So this supports strong buyer confidence heading into 2026 and beyond. Buyers purchase confidently when they can see long-term stability. And that benefits you as a seller. And the flip side for my sellers out there, you don't need to wait to move to see a large jump in appreciation. You don't need to wait to sell to see a large jump in home value. It's just not projected. Selling now or in early 2026 still positions you well based upon the equity you've built. So what does this mean for our Suffield homeowners out there? Well, let's bring this into our local market. Suffield will continue to see strong demand for well-maintained homes, steady buyer traffic, qualified buyers entering the market again, low to moderate inventory, quick sales for well-positioned homes, and longer days on market for homes that need updates or miss the mark on pricing. And your advantage right now comes from lower competition, improving affordability, strong equity, buyers returning to the market, and timing that positions you ahead of next year's expected rise in listings. So will the housing market rebound in 2026? Well, experts say yes. The early signs are already here. We are predicted to have a steady and healthy recovery. But if you want to chat on how this pertains to your home or get some clarity on all the information out there, I'm happy to walk you through the data and create a plan. So let's connect now to talk strategy, to review your home's value, and to build a customized plan so that you're ready to take full advantage of the market that's to come in 2026. And if you're curious what your home could sell for today, click that button below for a quick, instant home value opinion. All right, this is Stephanie Salerno from the Stephanie Salerno Team at Coldwell Banker Realty. This has been your November Suffield Connecticut housing market update. We're almost at Thanksgiving. I hope you have a fantastic Thanksgiving. I have so much to be grateful for to my clients and my friends and my family who help support our business. I am so grateful for you today and every day. And I'm wishing you all a very happy Thanksgiving, and we'll see you in December. All right, see you next month. Bye.